Hi everyone, welcome back to the channel. Today we are diving into more news that's making waves in the crypto world and beyond. Let's break it down. Recently, Argentine President Javier Milei found himself at the center of controversy after the collapse of the LIBRA cryptocurrency. Allegations have emerged claiming that Milei's sister was paid to influence his promotion of this token on social media. Milei has firmly denied these fraud allegations, stating that his social media post was meant to highlight a financial tool, not to endorse the cryptocurrency. He's standing his ground, but the opposition politicians have jumped on this, filing fraud charges against Milei and even calling for his impeachment. It's a political storm brewing in Argentina, and it's not just about the crypto market. In response to the backlash, Milei has launched an anti-corruption probe aiming to address these allegations head-on. He's also downplaying the losses faced by investors, which has raised eyebrows among many. S&P Global Ratings has made an exciting prediction. If the US establishes clear regulations for stablecoins, we could see a massive boom in this market, which means regulatory clarity could be the key to unlocking new opportunities. The stablecoin market has been growing at an incredible pace, which highlights a pressing need for oversight. Without clear regulations, both consumers and institutions may hesitate to fully engage with these digital assets. S&P also points out that Europe's MiCA regulations are giving European Union firms a competitive edge. With clear rules in place, European companies are better positioned to thrive in stablecoin space. So if the US wants to maintain its leadership in the global financial landscape, it must act quickly. Clear regulations are crucial for institutional adoption of stablecoins, and without them, they risk falling behind. Goldman Sachs has just increased its 12-month target for Chinese stocks, predicting a whopping $200 billion in inflows. This surge is largely driven by advancements in artificial intelligence. One of the key catalysts behind this optimism is DeepSeek's recent AI breakthrough. Analysts believe this innovation could significantly boost earnings growth for companies in the region. As a result, Goldman has raised its CSI 300 target to 4,700 and its MSCI China target to 85. These adjustments reflect a strong confidence in the potential of the Chinese market moving forward. Hedge funds are taking notice, increasing their exposure to China as they anticipate these positive trends. Meanwhile, India is experiencing significant outflows, making the contrast even more striking. Tether CEO Paulo Ardoino is actively engaging with US lawmakers as they work on upcoming stablecoin legislation. This is a crucial moment for the industry, and Tether is stepping up to be part of the conversation. Ardoino has affirmed Tether's commitment to advising on and complying with regulations. This proactive approach is essential as the Stable Act of 2025 and other bills are making their way through Congress, aiming to establish clear rules for stablecoin issuance. Tether is emphasizing its dedication to transparency and regulatory compliance. In a rapidly evolving market, these principles are vital for building trust with users and regulators alike. As these legislative efforts progress, the future of stablecoins could be shaped significantly. Clear regulations could pave the way for broader adoption and innovation in the crypto space. JPMorgan Chase has officially filed with the SEC, revealing that they hold over $1 million in Bitcoin and Ethereum exchange-traded funds, or ETFs. This is a significant move for one of the largest banks in the world, Their holdings include the ProShares Bitcoin ETF and BlackRock's iShares Bitcoin Trust ETF, along with smaller amounts in other Bitcoin and Ethereum ETFs. This diversification shows a strategic approach to investing in digital assets and is a strong signal of increasing acceptance of digital assets among traditional financial institutions. With the SEC approving these ETFs, it's clear that major players are starting to embrace the crypto market. As more institutions like JPMorgan invest in cryptocurrencies, we could see a shift in how digital assets are perceived and utilized in the financial landscape. This could lead to greater adoption and innovation in this space. Let's look at the economic indicators for this week. Housing starts came in slightly below expectations at 1.39 million. More importantly, this is a decline from last month, signaling a slowdown in new home construction. If this trend continues, it could impact the real estate market and construction jobs. Jobless claims remained steady, but could be a sign of softening in the labor market. If we see a rising trend in layoffs, it might signal trouble for consumer spending and economic growth. Manufacturing activity in the Philadelphia region slowed down. This dip could mean reduced confidence in the industrial sector, which might lead to lower investments in manufacturing and related industries. Oil inventories are higher than expected, indicating an oversupply. This could push oil prices down, which is great for consumers but could negatively affect oil producers and the energy sector. And there's good news. The PMI remains above 50, signaling modest expansion in the manufacturing sector. Service sector activity weakened slightly. This could be a sign that consumer spending is slowing, which might impact overall economic growth. A slight decline in existing home sales suggests that the housing market is cooling. Lower sales could reduce consumer confidence, lower property values, and impact industries like home improvement and real estate. Overall, we are seeing mixed signals in the economy. Slower job growth and declining home sales could raise concerns, but manufacturing and services are still holding up. The big question: is the economy slowing down, or is this just a temporary dip? Next week, all eyes will be on key economic indicators and earning releases such as CV consumer confidence, crude oil inventories, new home sales, GDP, and core PCE price index. Also, several major corporations are releasing earning releases such as Berkshire Hathaway, Home Depot, First Solar, Cover Group, Salesforce, Fubo TV, Apellis Pharmaceuticals, TJX Companies, Nvidia Corporation, and Zoom Communications. So what do you think of this week's developments? Let us know your thoughts in the comments below. Don't forget to like, subscribe, and hit that notification bell for more updates on these developing stories. Thanks for watching, and we'll see you next time.